Hello, folks. Welcome to another episode of Burning Platform. This time it is a concept called servitization. Sounds like a buzzword, but it's actually a very, very exciting trend that has been accelerating. And I have two very, very prominent executives who are very qualified to talk about it. Marne Martin is president of the Service Management GPU at IFS, and Mark Brewer is a global industry director for service management at IFS. So as you can tell, their titles talk a lot about service. I'll let them spend a few minutes bragging about themselves. But again, the topic is servitization. Marne, you go first.
Super, and I promise to only spend a few minutes. So I say that my first half of my career, I implemented software and really delivered on digital transformation. And my second half of my career, I'm helping our customers here at IFS to do the same. So it's really exciting to see how service is becoming at the forefront of company strategies. That's something I'm passionate about, and that's something that I lived when I was a customer implementing software. So my career has spanned the globe, something that I absolutely love. And you see servitization, the topic for today, impacting every economy, every business around the world. Mark's a big part of how we're influencing and driving that here at IFS. And we're seeing the opportunity across all the verticals, whether they're asset, people, or customer centric. So I'll pause there and let Mark introduce himself, and certainly we'll have a great conversation today.
Yeah, thanks. Hi. So yes, Mark Brewer. I am based out of the UK, but I have a global role, as Vinnie said, Vice President, Service Industries. And I guess a little like Marne, the first half of my career was actually in manufacturing, but implementing and designing systems for some global manufacturers. I actually started in automotive originally, which is a pioneer along with A&D in terms of pushing the envelope for digital transformation. After designing and implementing systems, probably around 15 years ago, I had my first foray into service. And I joined a company called Servitication that was a pioneer in service parts planning and service lifecycle management. Then I worked with another software company leading the pre-sales operation, a company called PTC, headquartered out of Boston, which really pioneered the concept of digital twin and merging the physical and the digital, which really created a wonderful backdrop to what we're now doing at IFS, which was to leverage this digital and physical convergence into this term we're discussing today, servitization, and the driver away from my product versus your product into what is the customer ultimately focused on, which is the outcome or the capability that's delivered from that. So I guess that's all the bragging we're looking to do here, Vinnie, in this kickoff, but looking forward to a fantastic discussion.
So Marne, IFS, unfairly so, is known as an ERP vendor, and then mostly a Nordic European vendor, right? For whatever reason, that's the brand. I mean, you clearly are very global, Mark's very global, and you're way more than ERP, right? So tell us a little bit about the IFS journey first.
I actually was in Europe last week. So certainly it's not that we don't have a strong go-to-market in Europe, and that's something that we're growing all the time. What's different, and if you look at the history, every company has to come from somewhere. And if you look at the traditional line of businesses, most often there was an ERP background or a CRM background. And I'll say my feeling is ERP has always given more data and more cross-functional ability to grow, especially when you look at servitization. CRM at its heart is a salesperson tool. And even if you say it's a 360 view of the customer, that's still fundamentally what it is, a salesperson's tool, versus ERP can become a backbone where you can make service the product. And you can really think about how you're delivering these outcomes when you bring in more customer asset, people-focused technology. You know, we here at IFS, service is at the heart of what we do. And that started long ago, yes, with ERP, but thinking about manufacturing, thinking about supply chain, thinking about how we enable service-driven companies to outperform their peers. Over the years, we've brought in many more people like me and our great go-to-market product teams, et cetera. And of course, acquired companies that have driven forward our expansion beyond ERP. And it's all looking at how you get the outcomes of digital transformation in ways that drive business value. If you look at the return on investment of expanding and implementing service management focused technology, whether that's designed for customer experience, monetizing IoT, even implementing digital twin in ways that drive the outcomes, predictive maintenance, say asset utilization and more asset-centric models, the return on investment and the value from those sort of digital tool investments can be transformative in these companies. And that's where IFS, I think, very proactively saw this opportunity some years ago. And certainly all of us here at IFS are helping our customers to realize the potential that's there with the software and technology that we have in market, as well as continuing to develop.
In fact, Gartner has been pretty generous to you in the field service and other service management areas, right? So certainly that's starting to come out. Mark, servitization, as I said in the beginning, sounds like a buzzword, but it really is a very, very key trend for a number of manufacturers, construction firms, and so on, right? Describe some of the experiences you've seen.
Sure, and it is a long word for sure, Vinnie, and it's one of the few words where here in the UK we still keep the Z for the servitization aspect of it. So I think that's interesting. Anyway, yes, I mean we've got customers aplenty. You know, maybe I'll start with one of our most proudest engagements, which was with a company most everyone I think here will have heard of. It's Rolls-Royce. Rolls-Royce Aerospace. They are genuinely a world leader in the engineering category, and obviously, manufacturing aircraft engines, close to that rocket scientist analogy that we always talk about. So Rolls-Royce, probably 25 years ago now, they went to market with a different proposition. They went to market with something they call power by the hour. And look at the words, it literally was that. They committed to only getting paid based on the flying hours of the aircraft or the airline operator. So for the first time, here was a manufacturer that was actually incentivized on the same thing as its customer, which was keeping the aircraft flying. So, that is at the heart of servitization, Vinnie, and the heart of this transformation, which is the outcome is what both parties or all parties are focused on. And they are today, considered the poster child of servitization in many, in many people's minds.
Thanks, Mark. But I think, we've seen, for example, telco and utilities are key verticals for us. And that's a type of, I started my career in telco. Servitization applies across every vertical, just in slightly different ways. And certainly, Mark, in our own experiences with our customers, we see that how they're embracing outcomes may differ a little bit. The outcome might be customer experience. It might be a new business model. It might be an uptime model. Mm-hmm. So Mark, it'll be interesting, maybe we can dive into this more with Vinnie talking a little bit about the type of outcome that our customers are looking to achieve, and how that, despite what type of outcome, how it's still driving revenues and change.
No, absolutely. I mean, I guess Rolls-Royce is there because they were there at the beginning, but let me give you a couple of other, if you like, more other tangible examples, in fact. So we got a customer that maybe many of our listeners here, Vinnie, have not heard of. It's a company called Tomra. Okay, so Tomra is a manufacturer, but Tomra is a manufacturer of something that probably still your listeners haven't heard of, which is an RVM. An RVM is a reverse vending machine. What is a reverse vending machine? Instead of giving you a beverage, it takes your empty beverage container, it takes your bottle or your can, for example. And the ultimate point here is it's a key sustainability story. Tomra's headquartered out of Norway. It's truly a global company and the leader in this technology, which is obviously very of the moment with the sustainability initiatives around the world. And Norway has 98% recycling of beverage containers. You know, I'm embarrassed in the UK, probably nowhere near that in the US as well. I would hasten to guess. But if you look at the technology,
I'm sure you're still ahead of the US. So don't
I'll probably wager a bet on that. True, also, Vinny. So there, you put the bottle in the machine in a Walmart store, for example, the unit's sitting there. And in the old days, Walmart might buy one of these machines, $40,000. No longer is there a capital outlay because it's a pay per bottle or pay per container model. And you know, the brilliant thing about the model is the people that do pay are the ones that are producing the packaging waste, which is the beverage manufacturer, Coca-Cola Enterprises or whomever it might be. So I think it's a brilliant model. The retailer is encouraging footfall in the store. The patron is doing their sustainability bit. The beverage manufacturer is collecting the bill, if you will, and us as customers get a credit off our next beverage. So, you know, that recycling as a service model, you know, very different to the Rolls-Royce. Exactly.
That's a good example of Vinnie, what we call circular economy, which fits with servitization. So if you think of some of the asset-centric verticals that, you know, sell to businesses and consumers a service, that obviously is a servitized model utilizing an asset. When you look at a lot of the manufacturers, and certainly sustainability is driving this, but so is supply chain limitations or challenges where they're now looking to refurbish or reuse in more ways. You know, Mark was talking about an example with plastic, but we'll see that as well with, for example, where there's shortages of rare earth metals or, you know, you name it. So servitization is ultimately having a model where when you manufacture something or when you create or invest in an asset, you're thinking of the service revenue you can drive from that. But it's also thinking from a sustainability perspective. How do I maximize the utilization of that asset? How do I deliver the most, say, efficient circular economy to customers who really do care about that as consumers? And how do I do this not only profitably, but where it actually drives the digitally enabled models of the future? And that really does rely on technology, whether that's, you know, technology of a process, you know, bringing through digitalization of use cases. It might also involve automation where automation didn't exist before, and ultimately embracing artificial intelligence and machine learning when you have the data and, say, the volume or the opportunity to do so.
Let's explore business models a little bit more because I talked to Nick Ward at Rolls-Royce Aviation in the year. And what was fascinating was that I was just burning to ask him, because last year, aviation basically went into a tailspin, right? So I was curious to find out, hey, what did that do to Rolls-Royce? Because they charged, like Mark, you said, for every takeoff. And he goes, you know, Vinnie, it wasn't that easy, but do you think we would have sold many engines last year? And that was a great answer because his point was, you know, our model is aligned with that of the customers. They were suffering, we suffered too. I mean, he didn't put it quite that way, but, you know, basically it was very aligned with what customers were going through. And that's a neat way of looking at it. Marty, though, it seems like we still have a lot of, I mean, clearly servitization has led to subscription-based models, a lot of new models, but it still seems like outcome-based is still not quite that common. Or is it because I don't see as many as you and Mark see out in the world?
I think we have to be thinking about what customers are delivering in terms of outcomes, okay? And there is an evolution on that. And I'll talk ultimately about what might be the holy grail, which is an outcomes-based service contract, and what we at IFS are doing to help our customers embrace those outcome-based service contracts. So, you know, an outcome will be at its, say, infancy, you know, a happy customer, you know, achieving SLAs, a renewing customer, an asset that is providing, you know, the energy, the telco access that enables us to live in our homes, run our businesses, et cetera. So I will say that absolutely all of our customers are providing outcomes to stay in business and to grow. What is the change? And this is where we at IFS are really working to deliver the platform, the capabilities, and the know-how is to move to outcome-based service contracts. And certainly you have the companies like Rolls-Royce that moved early into the stage and are still the flagship, teaching many others how to do it. I think what's holding it back, and this is also where not only galvanizing the technology, but what we call the digital dream team, and really looking at kind of a transformation team with an executive leadership of our customers, is thinking about, how they want to structure that outcome into a service contract, how they price that, making sure that the customer of theirs values the digital tools and the technology that goes into that. How do their sales and marketing teams need to evolve in order to have the outcome-based service contract be what's valued, again, like the Rolls-Royce example, versus articulating the benefits of a product, i.e. the engine in the old Rolls-Royce. So those skill sets are definitely coming along, say, for the ride alongside technology investments, but there's not always the focus on cultivating them. Here at IFS, we also make sure that we're helping customers to have the data so that they know the performance of their asset or even what customers want, and then thinking about how they can best model and deliver against that. So it is an iterative process. We spend a lot of time on thought leadership around this. And you also need the technology that can track the performance of the asset, the customer relationship, and most importantly, the profitability of the service contract, so that customers can evolve and trust that outcome-based service contracts will not only have the customer adoption that they need, but they will be equally or more profitable and give the return on investment on the technology.
Marty, is that there? Because one of the comments Phil Wainwright at Mirchandani made was, he said, if you look at SaaS in the technology world, he says SaaS struggled for the first 2 years in the late 90s, early 2000s, because the subscription, there was no software that could really analyze subscription models, right? If they were open in one quarter or whatever. I mean, it just wasn't that sophisticated.
Correct. And there's $25 trillion worth of new equipment coming into the market all the time. And I think a lot of the manufacturers of equipment are missing an opportunity to attach not only, some of that equipment will have warranty coverage on it. And we all know kind of the somewhat clunky experience of your next, say, extended warranty or your next repair contract, et cetera. So I think a lot of the manufacturers of equipment are missing the opportunity to attach a subscription model or an outcome-based contract to that is a multi-year and really matches with the expected longevity of the asset. With the longer lived assets, they easily can be in the field 10, 20 years, you name it. And even the equipment that might only be used, say, 2-3 years, there's ways of building the outcome that the customer wants into it, as well as a replace or refurbish type option. And that's really smart because it enables customers to move to outcomes while still driving, the brand loyalty to come back to the manufacturer, not only for service or the service ecosystem of that manufacturer, but also to make that replacement or, repurchase that's so impactful to their long-term profitability.
Well, hopefully they won't learn from the auto industry and keep calling us on our mobile phones every day, trying to sell us the extended warranty. Mark, that is
sure. Yeah, I mean, I think Auto's done a lot of things that we've learned from, right? I think Auto also got into an issue with the discounts and the dealer model, right? One of the things, if you look at retail strategy, that sort of promotion discount model is harder to pivot to an outcomes, kind of a sustainable revenue model than some other models that we've used, whether it's, thinking about how the wind turbine manufacturers have evolved their service models, which is actually really interesting. They're another kind of landmark example, like Rolls-Royce, of sometimes they sell a wind turbine, sometimes they sell, if you will, an outcomes-based contract based on outcomes to people that own the wind farm, and sometimes they might actually own the wind farm and be selling the electricity from it. So they're another great example to look at.
Mark, wouldn't you say though, we still are very timesheet based, still very annual contract based? I mean, what is holding back the move to
Right.
much
Yeah.
more aggressive outcome-based contracts?
Yeah, great question. We've seen a bit of an evolution here, Vinnie. Leading edge 10, 15 years ago for a lot of our customers was what's called condition-based maintenance or usage-based maintenance. What really kicked that up a gear was the advent of IoT. And now for the first time, you could see the asset after it left the factory gates, if you will. For condition and usage to work previously, it relied on the customer, it relied on the field technician to be the sensor. Today we say that the asset is the sensor, and the asset tell you what's happening and enable this digital twin. So we've seen the evolution from condition-based and usage-based to outcome-based. But to your question about what's been the inhibitor, it's a lot of what Marnie was talking about in respect of these companies have to change mindset, quite honestly, from being product-based to being outcome-focused. It sounds simple. It's fundamental to the way their DNA, if you like it, has evolved. So think about just the sales model, right? Just the sales model. You're selling elevators, okay? That can be a multi-million-dollar business when you're selling to a large hotel chain. But you've got to move away from that transactional business, that capital business, to an OpEx model, like you said, recurring revenue model, which is a more consultative model, by the way. More and more today, of course, the buyer is empowered anyway. So he does a lot of his buying journey before you even engage. So, the sales model is evolving anyway. But to tell a traditional salesman that he's no longer charging $1 million for an elevator, and then he moves on to his next customer, this is actually a lifetime, a service life cycle that you're supporting for customer success. And that's the new role, of course, that we know of in the last few years, Vinnie, which is customer success. For some people cannot make that, that leap. And I think, therefore, the real impedance has been on the organizational change, the mindset change, and the fact that new roles have to come about from that. And then finally, of course, per Marnie's point, it fundamentally, for a lot of these companies, changes the monetization model. And just like in the SaaS world, that's a transition that you have to be, prepared for, if you will.
Yeah, they have to have the working capital for that. I always say that, it's not just the people, the process, the technology. You have to have the cash to change. And, certainly margins typically or can be better on service than they are on the manufactured product, for sure. But how you achieve those margins is more phased over time, even if they're greater in the sum. So, a lot of companies, so I would say there is a tight correlation between the best performing companies financially and those that have moved to outcomes. So I don't think it's a coincidence that the best performing companies often have the talent that is, more oriented towards change and sophisticated in business models, but they also have the cash and, the working capital to make that pivot, which is what happens all the time when you move to subscription. Mark made a great point, which I love that he made it, that, customer experience is really driving a lot of the digital transformation that we see today. But when you ask our prospects and our customers, how do you measure customer experience? That's much more than, an NPS score, right? And you need to be tying customer experience into that drive to outcomes, the different types of service contracts, if it's applicable. And that's also one of the reasons in this journey towards servitization, as it means in all aspects, we also made the customerable acquisition to get that voice of the customer and also the voice of the employee to help with this change management. So I think that's really important, that we need to have the technology and domain expertise to help our customers go this way, but we also need to have the tools that they can be not only understanding better how their assets are performing, but getting more feedback and more quality feedback from their customers and their employees along this iterative journey.